Welcome to the Property Monitor Market Report for the month of August 2021. Dubai property prices increased a further 1.6% in August, leading to a quarter-on-quarter growth of 5.7% and a year-on-year growth now reaching just over 18.5%. Property prices now are at 956 dirhams per square foot. The last time that these levels was between April and May in 2013, when prices were between 952 and 966 dirhams a square foot. So we're in relation to the peak and trough of the previous market. Well, we're 21.9% away from the trough, the bottom of the last market, and 22.5% away from the peak. So we're pretty much right smack bang in the middle. So where will the market go from here? Well, one of the great things about a real estate price index is it lets you see what happened in the past and helps to predict what's going to happen in the future. So if we take a look at the Property Monitor Dynamic Price Index, we can see that in the 10 months following the time the market last bottomed out, prices have so far went on to appreciate 17.15%. And today, since reaching the bottom of the market in November 2020, prices have gone on over the last 10 months to appreciate 16.1%. So we're pretty much on a very similar trajectory to the last time the market recovered. And that last market recovery wasn't just 10 months. It continued to go on for another 14 months, to reaching a total appreciation of 37.2%. So what's going to happen with the Dubai market? Will we reach similar numbers? Will we reach them faster? Will we reach them slower? What's going to be transacting? So if you followed our last video and you've been reading our reports, you'll see we've been speaking about townhouses and villas leading the market. This is where the most activity has been. This is where the demand is. But what's happening right now is the inventory in those is drying up. Not as many apartments or villas are available, or they're available at prices where buyers don't want to reach to. So what's starting to transact? Well, we're starting to gradually see a shift towards apartments across all different price tiers. And that's a good thing because that's where a lot of inventory is currently available. And it's also where inventory is going to be coming onto the market in the future. So while we've seen the market recover so far based on price increases from villas and townhouses, we're likely to see the same start to happen from apartments. So the gap between the loss of appreciation in villas and townhouses, while that may slow down, the appreciation that we're going to see from apartments is likely to fill in that void. And we're probably going to see the market continue to appreciate at about 1% onwards for the rest of the year. So moving on to transactions, where are we? Well, on the back of a record month last month for the month of July, August has also set, you guessed it, another record month for transactions for any August. It's actually been the highest number of transactions for an August since 2009, coming in at 5,797 transactions. On a month-on-month basis, this is a 30.1% change, and on a year-to-date basis, 135.6% change. To put this in a little bit more perspective, year to date, how have we been performing? There's been all these record month of transactions. Every month I'm coming out or writing about record transaction numbers. It's been the best July since X. It's been the best June since X. Now it's the best August since X. So where are we? Well, this month, we've actually just passed the total number of transactions that concluded in all of 2020. And by the end of next month, we're going to pass the same number of transactions that concluded in 2019. And we're on pace to reach the levels that were concluded in 2013 and 2014, which were near record highs, only beaten by, you guessed it, 2009, that record month we're benchmarking against. So again, a record August, but how does this August compare to other Augusts? Well, it really compares. It outperforms pretty much every other August by a long shot. So looking at this chart, you can see there's an average line through the middle. That red line is the average amount of transactions that happen in any August all the way back to 2008. So you can see the clear leader there is that 2009 when so many transactions happened. And now the strongest one since then. But strongest on that 10-year average, 3,100 transactions last month, just under 5,800 transactions. But should August be this busy? So let's take a look at seasonality. So the Dubai market, like any real estate market, follows a typical seasonality. You've got highs, you've got lows, you've got busy times, you've got quiet times. The Dubai market typically has the strong season at the end of the year, beginning roughly in September and increasing up around about to the Christmas and the holiday period. And then in the new year, a little bit quieter in January, a little bit of a market that goes through in the early part of the year and then dropping off, and then having this little bit of a jump up in July, typically right around the vacation schedule. So what did August do? August typically is the quietest month of the year. Not this year. A record month far above any other. The second highest month actually all year based on transaction volume. So if August is supposed to be one of the quietest months of the year, or the quietest month of the year, what should we expect for the balance of the year coming? Well, I don't anticipate, there's nothing in the data that's showing the market's going to slow down. In fact, it's likely to increase and follow that typical seasonality cycle. And with Expo upon us, expect there to be an influx of purchases come in, and with developers targeting those purchases quite intentionally. And what they'll be looking to sell to them is apartments, because apartments is what they have on their books. It's a great ticket size. You're probably going to see things in the $1 million to $3 million price range, and that's going to be a focus in the coming months. So expect transaction volumes to keep increasing, and for 2021 to be a record year. So let's take a look at registration type. So there's two types of registration. There's either off-plan or an accrued, or there's for completed property which is recorded with a title deed. So we break the market down into these two. Just a reminder, off-plan transactions aren't always developer sales. An off-plan transaction or accrued registration could be, and most likely is, a developer first-time sale. However, it can also be a subsequent resale of that property where one's purchased from a developer and sold it onwards before the property's been completed. So it's important we break them down by this. So what we're looking at here is in August 2021, there were 2,580 off-plan transactions. Roughly 44.5% of the market were off-plan, as opposed to completed at 55.5%. So there's been a relative change in the way the market's been. What's predominantly been a developer-led market has over the last 12 to 18 months switched to be something that's not. We've seen more completed properties transact, and this typical 60-40 split that we saw in favor of off-plan has now switched to completed and title deeded properties. So last month at 55.5% for completed, although it was down 3.7% month on month, it's still closer to that 60-40 split. And if we look at the 12-month rolling average, 62.3% in favor of completed properties. And the 2020 average of 53, and furthermore, the 2019 average of 44.5%. So this 60-40 split, again, it's going to stay in favor of completed properties. So as a sister stat to sales registration, we also like to look at sales recurrence. And as I mentioned before, there's initial sales and then there's resales. So what we're looking at here is initial sales is the first time sale by a developer, regardless of registration type. So it could be sold in the off-plan, the construction phase, or in the completed and title deed phase. So in August, there were just over 3,800 initial sales, and that leading to a market share of 66.2%, which is actually a sizable increase month on month, up 6.4% on a monthly basis. So if we take a look long term, we've seen this change where initial sales have started to become less and less and become more in favor of resales. So that resale market, that sign of a mature market where it's not being developer led, there's been significant growth in the trend towards that change in the market. So where are we? While last month resales were down 6.4%, coming in at 33.8% of total market, and on a 12-month basis, they're actually at 43.2%. A year-to-date basis for this year, slightly above that at 43.3%, but well above the 2020 average of 33.8%, as well as the 2019 average of 33.2%. So I've talked about there being a shift towards ready properties, completed properties, those with title deed, as well as there being a shift towards resale properties. Except last month, both of these showed decreases. Why was that? The reason why is there was a significant amount of developer sales that came through last month. These helped raise transaction volumes and also change the percentage splits that we're seeing there. Will this be something that continues in the future months? Probably not. It's probably going to be an isolated incident that is just for this month and maybe next month, and we're going to see that long-term trend continue where properties are falling in favor of completed and resale properties. So let's take a look at the trend of property types. What's been selling faster, what's been more in demand? Well, it's pretty clear by now, villas and townhouses have been leading the way, and apartments not so much. So what I've got right now, take a look at a 10-year trend line, and you can see that apartments, back in 2011, 2012, 2013, high volume of apartment transactions were happening. And then you see over the last 10 years, them start to dwindle down and only start to come back again around about the pandemic time towards the end of the bottoming of the market. At the same time, you can see that villa and townhouses have pretty much stayed around about the same, with just a slight increase in the amount of townhouse transactions that have been happening, but villas being pretty much flatlined. So let's take a deeper look into this. Let's look at developer initial sales. And what you can see for apartments, it's actually contrary to the previous trend. During the last 10 years, apartment sales by developers, those initial sales have actually increased. Same as we said for townhouses as well. There's been an increase in townhouse sales by developers, but not so much by villas. There hasn't been as much construction activity going on in that villa segment. However, I bet you the developers wish there was now. So as a flip side to the developer initial sales, let's look at resales. This closely follows the overall trend of the market. So you've got resales of apartments after the high of the last market really slowing down and only starting to increase again once the market turn reached the bottom last November. Why is this? It's likely because those that bought apartments weren't able to sell them at a property price at a value that would make sense, where they wouldn't lose money. Or they might have bought them as an investment, where they've got a tenant in there and they're looking at a yield play. And if you know investing in Dubai, apartments probably appreciate at a lower rate, but turn better yields, as opposed to villa and townhouses that yield less, but typically have higher capital appreciation. So that could explain why we're seeing some of this there now. And with prices on the rise, this is probably another reason why we're seeing apartment sales also increase. So what's likely going to happen with this trend going forward? Well, I don't think the demand and people wanting villas and townhouses is going to slow down anytime soon. However, the disconnect between what sellers are asking and what buyers are willing to pay is going to come into effect. With apartments still providing a lot of value, expect that to continue to be a trend now that will increase. Will it go back to the levels we previously saw at the peak of the last market? Will it go there slowly? Will it go there quickly? Or are we going to see developers start to launch new master communities where the things that are in demand most, such as villas with big plots and spacious layouts, start to become a thing of the future? So moving on to residential price tiers. We've been reporting this for some time now. The 10 million plus segment of the market, that high-end segment, it's had another strong month. No surprises there. But on a market share basis, slightly lower than last month. If we look at the overall market, the bottom three tiers of the market, that lower end of the market, the sub 1 million market, have all experienced losses last month. The midsection of the market, a few increases there. However, that higher end of the market, not just the 10 million segment, but the 3 million plus segment has gone through a rather large rally. So looking further at that plus 10 million price segment, that segment that we all love to talk about, whilst not leading on a market share basis last month or setting any records, on a transaction number basis, it comes in at a big record, 141 transactions in the month of August. Where have this been happening? Not Palm Jumeirah anymore. It's switched to Dubai Hills Estate is where all this action's happening. Roughly 50% of those transactions happen within the master community. Second is Palm Jumeirah. Still a lot of sales going on there, however, switching from villas and townhouses onto apartments. If we look at the numbers year to date, there's been 753 sales in the 10 million plus price category, significantly more than previous years, well above 396 from 2020, the 296 from 2019, and the 207 from 2018. Digging in now, instead of looking at 9 price tiers, let's just look at 3. Let's look at that lower end of the market, the mid-market, and the high-end market. So as I mentioned, that high-end market or higher-end market, the 3 million plus market, where most of the villas are sitting in there, that's where we've seen continued gains over the last several months. So in August, there were 951 transactions, representing 21.1% of the market. And you can see over the previous 6 months, they've gone from 19%, 17%, 19%, 17%, now up to this 21% market share. In this price tier on a year-to-date basis, there's been just over 5,100 transactions. How does this compare to previous years? Well, in 2020, there were 2,900 transactions. In 2019, just below 3,500 transactions in this price tier. And in 2018, just above 2,700 transactions. So you can see this price tier has doubled in the most recent years and is likely to continue this trend so long as that inventory is available. So villas and townhouses in that price segment and 3 million plus, that's what can move, that's where there's the most demand right now. So something that's been helping to drive this market, this growth in transactions on a month-on-month basis, it's been the availability to get financing. And with that, with record low interest rates and favorable LTVs, we're seeing record mortgage numbers come in as well. In August, there were 1,895 residential mortgage transactions, just under 1,200 for apartments, 180 for townhouses, and 554 for villas. So we want to break this down now and look at those mortgage transactions into 3 different categories. We want to look at new origination, which what we define as a mortgage taken out in the same month the property is purchased. A bulk transaction, which could be a developer and investor that has multiple units and they're getting mortgages in that month. And then another category, which is something, say a refinance, a remortgage, or taking in a mortgage in a property other than the month that it's been purchased. So new originations coming in at 37.3%, bulk transactions just under 30%, and then the other category at just over 33%. Honing in further on that origination segment, we can look at the LTV, the loan to value. And that loan to value last month came in at 74.6%. It's roughly been this number pretty much all 2021. It's staying pretty strong around that 75% LTV. So this leads to a mortgage ticket size last month of 1.77 million and an average purchase price of just below 2.4 million. So where have these mortgages been happening? In this chart here, we take a look at the top 25 communities for mortgage transactions for the month of August. And then we break it down and focus really in on the top 10. So leading the way, Dubai Marina at a market share of 15.8%, followed by Motor City at 12%, then JVC and Alpha Zhann at 4.3 and 4.2%. Coming in at equal 5th place, Emirates Living at 4.1% and Nad Al Sheba. 7th, Dubai Hills Estate at 3.5%, Dubai Silicon Oasis at 3.2%, and tied for 9th position, JLT and RemRam. You might say, RemRam, what are all the transactions happening out there? I didn't realize there was so much activity out in that market. That's where the bulk transactions come in. So a few of those surprises in the top 10, this is where we can really drill down to now. So RemRam, there was a significant amount of bulk transactions that happen. So while Dubai Marina and Motor City are indeed popular communities where a significant amount of transaction volumes take place, these bulk sales come in and really pad the numbers. So in Dubai Marina, there was a large number, 232 transactions at Barcelo Residences. So this is a hotel that's operating there, so they're likely taking that equity out to put into the hotel and hotel operations. And then another one in JVC, 5 JVC. This isn't the first time we've seen bulk transactions for a 5 property. Recently announced in the news, it now starts to make sense. 5's opening yet another hotel in JBR, so you'll see a 5 coming to there. So it starts to make sense what developers are doing when they're refinancing and taking money out of their properties. So what's likely to happen with the mortgage market going forward? Well, whilst interest rates stay low, expect mortgage volumes to continue to increase. And also anticipate that with a number of projects coming to market from developers where construction's completed and there's post-handover payment plans, the banks be able to step in and take on those mortgages rather than the developer holding it on their books for the post-handover payment period. That's been your Property Monitor market report for the month of August. If you liked the video, feel free to give us a thumbs up below, and if you want to stay in touch for further developments and more updates, be sure to subscribe to the channel. To download the market report, check out our website or take a look at the links in the description below.